Hey everybody, Jeff Burke here with 7th Street Financial. Welcome to today's video. Today we are going to talk about that thing that's on everybody's mind, dominating the news, coronavirus, and specifically what it's doing to your investment portfolio. Initially, while coronavirus has been around since sometime in January, our stock market's kind of largely ignored it. Until February 24th, that is. In the 9 trading days since then, our stock market's down about 2,500 points, or 9%. Not only have we seen such a big drop, but we've had extreme volatility within there. We've had 4 1,000-point days in those 9, and there's only been a total of 7 in the history of the stock market. Now, from a percentage standpoint, this still doesn't match with what we saw during the financial crisis, as we had swings of over 7% during there. The biggest swing we've had here is 5%, but still pretty volatile nonetheless. Now, one of the questions is, where are we headed from here? And that's the thing nobody knows. And the stock market hates the unknown. The medical professionals don't know where it's going. And certainly financial professionals, we don't know how long this is going to last. We don't know how far the market could drop. And we certainly don't know what that magic day is when things are going to hit a bottom and start going back up. One of the things that we can look at is what has happened historically. And over the last 20 years, there's been a handful of these sort of outbreaks at various places around the globe. Each time the markets dropped between 7 and 14%, and then 6 months after the outbreak, all of those losses have been recovered and then some. And there's really no reason to expect that that won't happen again here. Again, what we just don't know is how long that's going to take for that to play out. So in the interim, expect this sort of continuing volatility. So what should you do? Well, number one, have a diversified portfolio. Those who have probably haven't been feeling quite the extent of this pain. Maybe you're down 5 to 7%, which is a little bit more manageable. Number two, let's look at your risk tolerance and risk capacity. If you're the type of person who's losing sleep at night, tossing and turning, overseeing these huge swings on a daily basis, or you have a short-term need for some of that invested money, it might make sense to be a little bit more conservative. On the flip side, if you've got a longer-term investing horizon and you're confident things are going to bounce back, you can probably stay where you're at. Either way, if you've got questions and you're wondering if you should be doing something with your portfolio, please talk to your finance professional about what's right for you, because your situation is going to be unique to you. If you don't have one, or you're interested in a second opinion, please contact us at 7th Street Financial. We'd love to talk to you and see if there's any way we can help you out. Our contact information should be on the screen. Otherwise, that's it for today. Thank you so much for listening, and have a great rest of your day.